interesting. So yeah, you're welcome to the show, and my name remains Ileke. For those of us just joining in for the first time, this is Crypto Over Coffee, and it's your favorite crypto talk show. And it's going to be an amazing time as usual. So if you're joining for the first time, just get ready to get a truckload of value tonight. All right, so straight into what we have for tonight, guys. Okay, you can hear me and see my screen. That's awesome. Just keep the responses coming in. All right, while we move into what we have for today. Okay, so today we're going to be talking about something really interesting, all right, and that is setting up your portfolio as a beginner. Now, if you've been on the show, you would know that we've talked about a lot of things. We've covered a whole lot, and if you've missed the previous episodes, or if this is the first time you're joining in, kindly go to our YouTube channel. I'll be dropping the link after this meeting on the WhatsApp group chat. So kindly go to the YouTube channel and catch up on everything that you've missed. All right, it's a truckload of value. You really don't want to miss that. Okay, so tonight we're going to be looking at setting up your portfolio for beginners. Now, I believe that a lot of us in here, all right, where probably we have some OGs here, all right, and by OGs I mean people who have been long in the game, all right, crypto traders that have been in the system for a couple of years now. But the majority of the people here, I believe, are newbies and people who want to get into the trend of the whole cryptocurrency thing, all right. And like I always say, it's not a bad place to start. I mean, this industry is relatively new. It's barely over a decade, all right. So if there's any time to start, it will be now. So never ever think you're late. Okay, so I'm gonna start on this note tonight. There's a popular saying that goes, the best time to buy crypto was 10 years ago. All right, the second best time to buy was yesterday. So goes the saying, but personally I would say that the best time to buy cryptos is now and today. So what this means is that you're not late, all right. Whatever the time you're buying, if you've been following recent events, you will notice that there's been a whole lot of market crash, there's been a whole lot of market manipulations, correction, whatever you want to call it. Okay, but then we've seen that over the past few days, Bitcoin has consistently been dipping, right? And of course, we know how it works. Once Bitcoin is dipping, other coins tend to follow. All right, so we've seen a lot of we've seen a recent crash in the market, and there's a speculation that the bull run is over, and then we've officially entered the bear market, but that is not confirmed yet. All right, so we've seen that BTC has gone below the $35,000 price, and there's also speculation that it might go as low as $25,000. But well, let's watch and see what happens. So you see, if you probably were in regret that you didn't buy BTC when it hit 60K, all right, $60K, you see, this is another opportunity for you to get in. So in the reality of it is that no time is actually too late. All right, it's never too late to get into the system, into this ecosystem. So if you're just starting out, well, congratulations, because you're actually entering the market at a very good time. The best time to buy coins, the best time to invest is in the bear market, all right, because coins are extremely cheap at the moment. Yesterday I did an update on my WhatsApp, and I was saying that if you've not exhausted your funds, or if you've not lost all of your funds because of the dip, this is a good time to buy some tokens. I mean, some tokens are ridiculously cheap right now, so it's a very good time to enter into the trade. Okay, so moving forward, we're not here to talk about the bear market today. We're talking about how to set up a portfolio as a beginner. Now you know about cryptocurrencies, you know about the industry, you know that this is not a bubble that is going to burst. You understand why you're coming into this industry. You know, we've covered all these things in the previous episodes. Like I said, if you missed them, kindly go to our YouTube channel and watch them so you can follow up. Okay, so Ileke has been telling you about Bitcoin, and you're like, okay, fine. I think I'm convinced now. I think I understand how this works now. All right, so how do I begin? What do I buy first? Do I just fill my portfolio with Bitcoin? What is a portfolio, by the way? All right, is it a bag of files of documents? You know, so this is what we're going to be looking at, and then let's see. Okay, awesome. Gani, you can hear me. All right, I'm glad you're still here. Okay, awesome. So the first step in investing in digital assets, first of all, you should know that you cannot buy cryptocurrencies from a bank. Okay, so in case you're thinking that you probably need to go to First Bank and tell them that you want to open a crypto account, it doesn't work that way. Banks don't deal with cryptocurrencies. Maybe sometime in the future they will, but currently they are very averse to cryptocurrencies because they believe that just like China right now is causing feud in the market because you know, let's not even talk about the market. The market manipulation presently is on another level. You know, so currently China is saying they're going to ban cryptocurrency and all of that because it's interfering with the normal financial ecosystem. You know, so this is the challenge. We're not surprised because this is the challenge we have in most countries, including Nigeria. Like I said, financial analysts believe that these assets are too volatile and they are too risky, so they're averse to it. So what am I saying? You cannot go to a bank. Bank has nothing to do with cryptocurrencies. If you're going to trade cryptocurrencies, you will need to buy from exchanges. All right, cryptocurrency has that's how we call it, an ecosystem. It has an ecosystem of its own. The blockchain industry is different from the banking industry. All right, so you have to work with the institutions, all right, that have been placed there to make the process easy. So first of all, you know that you're not going to a bank, you're buying from an exchange. Now this exchange might be a centralized exchange or a decentralized exchange, all right, but as beginners, mostly you're going to be dealing with spot trading and all of that, so you will probably most likely buy from centralized exchanges such as Binance, you know, Kraken, Coinbase and all of that. Okay, so that is the first step. You will need to fund your account. You know, you need to set up a Binance account. You know, if you're on the group and you're active, I think I saw a couple of persons asking about their verification on Binance. Should I use my national ID card? Can I use my voter's card? So these are the first steps that you're supposed to take. You're supposed to set up a Binance account, you know, verify it, wherever you're going to be buying your assets from, maybe crypto.com and all of that. Just set up all these things, download the wallet, set them up, and then you are ready to invest. Okay, so as soon as you have an account with some of all the centralized exchanges and all of them, the next thing you want to do is fund. Now you can fund with any major currency. You can fund with Bitcoin, Ethereum. You can fund with USDT, which is a stable coin. You can also fund with BNB. It depends on what you get, but the most popular tokens or coins that people fund with includes Bitcoin, Ethereum, or USDT. All right, and as soon as you fund your account, you're ready to set up your portfolio. Now that is the first step. I believe you understand that. Okay, so moving on, how much of your portfolio should be in digital assets? Now, understand that digital assets are assets like cryptocurrencies, and you're trading forex, you know, or you're trading stocks. These are digital assets. Now, real estate, whether it's online or offline, is not a digital asset. Okay, so having said that, now some experts, because of their aversion to the volatility of cryptocurrency, they usually advise that not more than 2% of your portfolio should be in crypto assets. All right, so they believe that even if you have $1 million or you have $100 million. Just 2% of your portfolio should be in crypto assets, regardless of how much you have. But I think that is ridiculously small. All right. Some others have gone on to recommend 10%, but I still think it's ridiculously small because, like I said from the beginning, I said crypto is a high risk, high return industry. All right. The risk is high, so the return is definitely high. Now, when it comes to investing, there are a few things you should note here, because there's no one hard and fast rule for investing. Of course, there are a few basic standard rules, but then there are so many variables to it that we cannot say there is exactly a hard and fast rule, because there are some things you need to note about investing, and I'm going to list them. The first one is that you should know that when it comes to investing, high risk equals high reward. I've mentioned this already, but I'm going to emphasize it again because you need to understand that as an investor. Low risk equals low reward. High risk equals high reward. All right. So the amount of money you're willing to invest, regardless of what any financial analyst says or whatever any financial analyst recommends, the amount of money you would eventually invest depends on your risk appetite. Okay, so that is standard, that is a constant. All right, that is, nothing can change that. No matter how much I tell you that the cryptocurrency industry, the blockchain industry is very profitable, no matter the potentials I tell you that this industry has, eventually what you invest depends on your risk appetite. I know a couple of persons who do not, their risk appetite is so small, so they rather just do buy and hold. They would rather just buy Bitcoin, large cap coins. The risk is small. All right, so I prefer to be here. I don't want to have high BP. I don't want to chase coins and all of that. So I just want to be here. I just want to buy Bitcoin and hold it for the next 7 months. Fine. So eventually, the amount of money you would invest depends on your risk appetite. Note that. Regardless of any variable, this is a constant. Now, the second thing you should note is that the crypto market is highly speculative and largely unregulated. All right. Eventually, the crypto market is a decentralized market, so there's nobody regulating it. All right. So keep in mind that you can get liquidated. Now, this is the second thing you should note. Because you can easily get liquidated, because this market is very speculative, mark my word, it is highly speculative and largely unregulated. It is also very risky. So because of this, trade with what you can afford to lose. This is the second rule of investment when it comes to crypto especially. Now, these rules also apply to other investment vehicles, but I'm talking specifically about the crypto industry right now. This market is highly volatile. I just told you that cryptocurrency or the blockchain industry has been named the most notoriously volatile industry of the century. So if an industry is known for its volatility, you better be careful what you invest. This is not an industry where you invest your school fees. This is not Ponzi. This is not MMM. All right, this is not a money doubling investment or a money doubling strategy. No, it's you can get liquidated. Like, you can literally lose all your money. If you were on the show last week, we had the head of partnership for NABU, who was probably formerly was working with OKEX formerly. Now OKEX is a Chinese exchange just like Binance, and he told you that the reason why he stopped trading initially was because he got liquidated too. Yes, even though part of his was due to the fact that he entered for some of these wrong airdrops, and they eventually were able to access his account. But then another reason he actually stopped trading was because he lost his money. He actually literally got liquidated. So there's the potential for you to lose all your money. In this particular bearish market, in the past few days, you really don't want to know how much people have lost. I shared it on the WhatsApp group that I know somebody that lost about $70,000. This is we're talking about a couple of days, no weeks. So you can literally get liquidated. So please newbies, do not use your school fees, your house rent, because okay, I just want to trade and double it. Don't fall for that. This industry is too volatile for you to take such risk, except you want to risk going homeless, all right, or risk dropping out of school. But I'm sure nobody wants that. So please trade with what you can afford to lose. Okay, now that is the second rule. The third rule is this: you must allocate a certain percentage of your portfolio to cryptocurrencies. Now, I said this before that even if you have 100 million naira, maybe it was an inheritance or something, it would be very unwise to take all of that money and invest in cryptocurrencies. There's always safety in diversifying your portfolio. Now, when I'm talking about your portfolio at this point, in context, I'm talking about your investment portfolio generally. Now, when you have an investment portfolio, your investment portfolio should look like this. Cryptocurrencies, a particular allocation to cryptocurrencies, maybe a particular allocation to stocks, all right, maybe a particular allocation to real estate if you're a real estate person, basically just diversified investment, another percentage in agriculture. Now, the reason this is necessary is because it will help you mitigate risk. All right, every of these industries I mentioned, agriculture, real estate, stocks, and digital assets, generally stocks, cryptocurrencies, they all have different risk level. And out of all of them, the digital asset industry is the most volatile, has the highest risk. So you see, you want to balance your portfolio. The essence of diversifying your general portfolio, I'm talking about your general portfolio now, is to help you mitigate risk. At least if you lose some money here, this other industry that is not so volatile, you are sure that your profit from this industry is going to somehow cover for your loss. Okay, so that is how your portfolio should look like. It should be balanced, it should be spread out to mitigate risk. Now, but then the truth is, it's easier to say these things, all right, on paper and to just say them in words. But then, the reality of it is that with the recent spike in the price of Bitcoin, Ethereum, and BNB and all of that, most times it's difficult to make a rational decision. So most times it's normal. I mean, we're all humans. Who doesn't want to double money? Okay, because with every investment, your ROI depends on your equity. Depends on your capital. So if you are putting 100k, you get profit for 100k. If you put 100 million, you get profit for 100 million. So with the recent spike in cryptocurrencies, it's almost very difficult to make a rational decision. Like, even though you know that you should spread your risk, your head, it's in your head, but you don't want to do that because you feel like, oh, I'm just going to put this money in cryptocurrency and I'm just going to double it. When I double it, I can now spread my risk, So I understand that part. But when you're thinking like that, remember something. I want you to remember something when those thoughts cross your mind. Remember that all investing is ruled by greed and fear. The market is ruled by greed and fear. Okay? So why do you think we're having a bear market currently? It's because a lot of persons are panicking. There's a lot of feud in the market, fear, uncertainty, doubt. People are scared. They're like, oh my God, if Bitcoin is at 35k, what if it goes down to $1,000? Please let me take out my money. And you see a lot of fear. It's causing the market to be bearish. Now, when we're in a bull run, what makes people even lose money also in the bull run is because of greed. You put in 100k, you make another 100k, like, wow, so this works. Oh my God, I'm going to put in 200. Why do you think people lost money in MMM? Because they put in 10k, they doubled it, all right? They felt like, wow, this is too good to be true. The next day, they put in 20k. They made an extra 20k, and they're like, oh my God. And then the person says, man, I've seen my, this is the way out of poverty. Please, can you lend me 100k? And the person borrows 100k with the hopes of, doubling or tripling it. And guess what? He gets stuck and the system crashes and he's in debt. So generally the market is ruled by greed and fear. So when you're tempted to put in all your money, just understand that at that point you're being greedy, probably because you're seeing grains. Think about when the market goes the other way. All right. So what I'm trying to say in essence is that when it comes to investing your money, you have to be disciplined. That's why the number one rule for forex traders and cryptocurrency traders is emotional management. I talked about this in one of our previous episodes. Excuse me. I'm sure a couple of us have seen these memes about crypto traders, how they are heartless, how they are unemotional, and all of that. It's called emotional discipline. You cannot be emotional if you're going to be trading this market. So know that as a trader, discipline demands that you spread your assets to mitigate your risk. All right. So your in summary, ideally your investment portfolio should be a combination of cryptos, of stocks. Now, when I'm talking about stocks, I'm specifically talking about foreign stocks, not Access Bank, not GT Bank, because I mentioned in one of the episodes that I had an investment at some point in stocks, and for months I didn't make any profit. I think I even lost the part of the money because I bought Nigerian stock, and I said, okay, fine, thank you very much. Let me give me my money, and I took out my money. So you can invest in cryptos, you can invest in stocks, you can do forex, then you can also look into other options like real estate away from the digital arena. You can look into real estate, you can look into setting up a virtual business. Now, you can look into starting a service-based business. When it comes to service-based business, it's the easiest kind of business to start. We're not doing a business seminar tonight, so I'm not going to delve. I'm just debating a little. Now, when you're running a service-based business, I do a lot of advertising. I have an advertising agency. A couple of you that follow me on my status probably have seen it. I make videos, excellent voiceovers and all of that, graphic designs and all of that. So now it's virtual. I didn't need to put in any money to set up physical structures. So that could also be an investment you could look into. All right. So far, this is what we've said. It's time for us to go on a break. And after this break, we'll be back to take the other part of this meeting. All right, guys. The link is dropping in a few minutes. Wait for the link, and as soon as you get it, do not hesitate to join. See you on the other side.